Well, welcome back to Finance Uncut. On today's episode, will silver rise 1,150% again? So can silver rise 1,150% again? Well, I wanted to share this article from Jeff Clark, and I'll put a link in the description below and you can read the whole thing. But in the mid 1970s, inflation was soaring, unemployment was high, the US was in a recession, an energy crisis had just kicked off, and there were both political and geopolitical issues. Very, very familiar, right? Absolutely. And yet, from 74 to 76, the gold price fell by over 40%, stretched over a 2-year period of time. A falling gold price with major catalysts in play that at the time many thought would push it higher, yet it defied logic and tumbled. Well, same thing here from August last year. You know, we've seen inflation rise and negative real rates, and really all the catalysts are in play for a rising gold price, and yet we haven't seen that. But same thing happened in that mid-70s period. So here's the 2-year gold price action overlaid with today's price. So despite a strong environment for gold, the price was in a relentless downward trend. Today we're also surrounded by numerous gold positive factors, and yet you can see that the price behavior is very similar. As you likely know, however, that mid-70s period, as confusing as it may have been for investors, ended up being only one chapter in gold's book. The next chapter, for those that held on, those that didn't sell, and I suspect perhaps we're seeing the same thing right now, the rest of the 70s was a whole lot of fun. The gold price rose 717% from its 1976 low to its 1980 high. What seems clear is that gold was simply coiling, building up more and more pressure since the catalyst that puzzled investors early on finally blew the lid off the price. In my view, that's exactly what we're seeing now, what's happening right now. We have a falling price, yet the catalysts are building up more and more pressure to a point where reality catches up and leads to an explosion in gold. Now, what about silver? The current silver price is even more eerily similar to the mid-70s than gold. This compares both price periods after their initial crash, and as I wanted to zoom in to see if they were behaving similarly, you can see that indeed they were. Like gold, the silver price was surrounded by factors that most thought would push it up, similar to today, but it remained weak for 2 years. And also like gold, the next chapter in silver would prove all doubters and naysayers horribly wrong. The spring under silver was basically coiling, eventually leading to a blow-off top that stunned the investment community and led to a full-blown mania. Silver rose over 11-fold from its low to high in 4 years. For the investor who bought near the mid-70s low and sold near the 1980 top, they basically could have added a zero to their investment. Again, this setup sounds awfully similar to what we have today. A falling silver price surrounded by major catalysts that are likely doing nothing but tightening the spring under the price, to a point where it's likely to explode in the near future. The message here is clear. Unless there is such a thing as a free lunch, the economic, market, and monetary catalysts surrounding gold and silver today are building the pressure under them greater and greater. Our job is to make sure we're financially prepared for what is shaping up to be an event that ignites an explosion in gold and silver prices. So those of you that watched this video that I did last week, this will drive silver demand. Towards the end of the video, I share how I spoke with a large institutional investor. And you'll know by this video that, in my opinion, it is going to be that institutional investor, the big investors that are going to pour back into gold and silver, which we will see that price explosion. When we see these risk-on assets start tumbling, and we could be very, very close to that actually, from a lot of factors going on, whether it's a recession-led or a China recession-led event, from their property sector and what Beijing's doing there to basically allow firms to go under. They are putting an end to the speculative debt bubble in China. And whether that then leads, or whether it's central banks finally tapering and raising rates to fight inflation. Morgan Stanley just came out last week as well and actually told the Fed, raise rates, let's prick this thing, let's prick this asset bubble. Now that some insiders have sold out, they're happy for things to fall now. So I think we're entering a very dangerous period where risk on assets are at risk. And what we'll see is the big institutional investors flow back into gold and silver for one, safety, but two, to protect their purchasing power, because I think the inflationary forces at hand are only going to increase. And if we do have a liquidity issue where markets do fall, well, what are governments and central banks going to do? They're going to turn on the printing presses again, so to speak. We know that's not exactly what they do, but figuratively speaking. So that's what I think is going to drive the next big bubble in gold and silver. And even Jim Rogers said that he thinks silver will turn into a bubble. So I just wanted to share this picture. So I shared this picture on social media. These gold coins here equate to a value of about $85,000 Australian. That's the average annual salary here in Australia, or actually a bit above that. That's $85,000. That's a year's salary in someone's hand. Yeah, I thought that was pretty cool. Just wanted to share it. So as an Austrian economic analyst and using Austrian economics as my foundation for my investment philosophy, I wanted to share a few books with you guys. Now, obviously, I want you guys to read Mises, read Rothbard, understand Austrian economics at its core and its philosophy, so that you really, really understand it. However, those of you that want to kind of skip ahead, okay, that's cool. Here's a few books that I highly recommend reading. In fact, you'll probably read these books. If you do skip ahead, read these books, and you'll be like, oh, I want to know more about this Austrian economic theory. And then you'll probably go back. But Ronnie Stoffelet's book, Austrian School for Investors, Austrian Investing Between Inflation and Deflation. Highly recommend you guys pick up a copy of this. And The Tao of Capital, Austrian Investing in a Distorted World by Mark Spitznagel. I believe he's got another book out. I think it's called Unsafe. You can fact check me, but he's got another book that's come out, which I haven't yet read, so I won't talk about that. But this book, fantastic. Towards the end of the book, he actually talks a little bit about using options and whatnot, and that's a strategy that I use as well. But really, really, really good book about using Austrian economics as part of your investment philosophy. And Mark Skoussen's book, Investing in One Lesson, obviously a play on Henry Hazlitt's Economics in One Lesson. But once again, very good book that I highly recommend. Actually, Mark, one of my favorite books, Mark actually did a book discussing the differences between the Austrian school versus the Chicago school. I thought that was a really good book. There's only one or two issues that I had with it, where he really didn't talk about Richard Cantillon or give Richard Cantillon any credit. He kind of gave Adam Smith a lot of credit in that book. In fact, I'm going to do another video, probably not my next video. My next video coming out, I'm actually going to share with you some stuff about what's going on with the World Economic Forum, central banks, all that sort of stuff. The World Economic Forum have now blocked me on Twitter. Obviously, they don't like honest debate. So I'm going to talk about what's going on from that perspective and what's happening in the globe, because there's some really, really bad things happening that I think people need to be prepared for. Gold and silver is absolutely an important part of that. Physical gold and silver is absolutely important part of that. And just, yeah, the Western world is absolutely destroying itself, shooting itself in the foot. And so I'm going to be talking more about that. However, I'll probably do another video after that where I talk about Adam Smith and Richard Cantillon. So it'll be more of an economic thing. It's a book that Murray Rothbard wrote where he really ripped Adam Smith a new one, really critiqued him, and yeah, just some of the truths in economic history. So some of you might like that, some might not. I'm probably not going to get many views on that video, but anyway. So anyway, guys, I just wanted to share this article from Jeff Clark, and also just give you guys some awesome material. I love these 3 books. I will put links in the description below on where you can get a copy, where you can buy a copy of these 3 books. I highly recommend it. I think personally what gives me the advantage or gives me the edge over most investors is my understanding of Austrian economics and using that and applying that into the real world of investing. Anyway, that is my opinion. Once again, this channel does not give financial advice. Guys, hit that like button if you like this video. Really do appreciate it. Love to see your thoughts and opinions in the comments below. Don't forget to hit that notification bell if you haven't done so you get all my videos when I upload them. Anyway, guys, take care, and I'll see you again on another episode of Finance Uncut.